My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Friends, I just want to try to make you a little money. My job is not just to entertain, but to educate, to teach you. So call me at 1-800-743-CBC or tweet me at Jim Cramer. After basically inline November jobs report, better than October, but with the unemployment rate still ticking up to 4.2%, I don't think that does much to change the Federal Reserve's rate cut calculus. One reason the averages had a sedate session, Dow dipping 123 points, S&P advancing 0.25%, and the Nasdaq gaining 0.81%.
House of pleasure.
That's right. I'm still expecting a 25 basis point cut later in the month. Didn't see anything today that made me surprised. With the non-farm payrolls out of the way, though, what's on tap for next week? Let's take a look. Now, we kick things off with two quarters that are emblematic of what's working in this market, the data center and the enterprise software plays. Now, first, here's Oracle, one of the major companies building out these data centers. I think they'll show incredible strength. Amazing, really fabulous sales, because there's practically an endless demand for data centers. Let's see if they're still planning to build those things like crazy. Quickly, NVIDIA stock, of course, the data centers are filled with that, was uncharacteristically weak today. Made no sense because HP Enterprise, one of the biggest customers, reported a blowout quarter last night and said that business with NVIDIA is incredibly strong. We'll learn more from Oracle Monday evening, and I'm sure we will find out what the story was with NVIDIA stock, too. The story that some had today, and the rest, no doubt, will get on Monday. The other standout should be this company called MongoDB, which is an enterprise database play with tools that help other software developers create applications. For most of 2024, these kinds of stocks were in the doghouse. Market gravitated toward hardware, especially semiconductors. But then Salesforce reported excellent numbers this weekend. The stock soared. While some of that's because the quarter was truly excellent, much of it's just a big change of sentiment toward these kinds of stocks. These enterprise software stocks, which is what they're called, were all doing okay during the lull, but now they're doing better than okay, and their stocks are being greeted with extraordinary buying. Keep track of the enterprise software stocks. Toll Brothers high-end housing reports Monday evening. When the Fed cut was announced, the stock flew up. But then it stalled because bond yields actually and surprisingly went higher. Given that mortgage rates are priced off the long end of the bond market, you can see why the stock struggled. And then bond yields came down again, and Toll's been as strong as ever. Can it deliver on these numbers? Is lumber price too high? Well, we won't have to wait too long to find out. Now, you know I've become hesitant to endorse money-losing companies with stocks that are extremely overvalued. After the close, we hear from a company called C3AI, the profitless enterprise software company with a stock that's shot up more than 50% in the last 3 weeks, including 8% just today. Can it keep roaring? In a rational market, no. But in this market, well, you can't afford to bet against any company with AI in its name. Tuesday morning, we get results from AutoZone, AZO. Here we have a company that imports aftermarket auto parts, including some from China. And any company that imports anything from China is viewed with tremendous skepticism right now, right here. AutoZone, though, has a gigantic buyback that kicks in on any weakness. So can it sidestep tariff worries? I can tell you from the disappointing portion of my charitable trust that you simply can't own stocks with China exposure here. That's been the case ever since the election. I don't think anything has changed. So I don't know. I used to love it. I can't load the boat up here. Now, earlier this week, Ollie's bargain outlet caught a rare downgrade as this purveyor of closeout merchandise has been an outstanding performer of many years. It's a highly promotional moment for retail. This kind of off-price chain tends to be a big winner. Ollie's gets tractor trailer after tractor trailer full of unsold premium-priced merchandise, and they get it for next to nothing. And then they sell the stuff to you at bargain basement prices. I don't want to get off this horse. After the close, boy, here comes complications. Tuesday morning, GameStop, right? They report. Well, speak of the devil, GameStop will most likely deliver numbers that please those who want to be pleased. No, that is not circular reasoning, people. We're in speculative nirvana right now. We have stocks like SoundHound AI and Hut 8 Corp, where there's no real news, but they are just real moves, okay? GameStop seems to have a similar percolation going. Hey, I could have cited the stock of mobile game software company AppLovin. Now, this is a cold stock that soared from 168 to 401 in a month's time on nothing. Boy, that stock doesn't know the word quit. That's right. All week I've been talking about how I'm beginning to see some signs of excess that do make me uncomfortable. I think the reaction to GameStop, both before and after, will tell us whether we need to know about how excessive things have really become. I can't tell you to sell it. You'll blame me if it soars on no earnings, but I can't tell you to buy it either because I don't have any legitimate reason whatsoever to do so. It's a cult stock, and this is a market where people seem eager to drink the Kool-Aid. Like I said, tough moment if you want to be a rigorous buyer of inexpensive stocks that belong to great companies. Wednesday, we start the morning with the CPI, the Consumer Price Index. The Fed meets 2 weeks from now, and if inflation flares up, it'll be pretty darn hard for them to cut rates again. All of us still see high prices when we go to the supermarket, right? So we shouldn't be surprised if the CPI comes in hot. At that point, why should the Fed really bother to cut? Be ready for that kind of chatter. Don't worry, they'll still cut. We also have some corporate news that could help explain something that's been a real mystery, maybe to me, maybe to you. I'm talking about what happened, what went wrong at Macy's, where an employee apparently had millions in delivery expenses hidden. Now, shareholders are entitled to know what really happened here. I don't think the company's fully explained them at all. And we want to know exactly, before we pay any attention to the forecast, we got to understand what went wrong. We need answers about how someone got away with this. And more important, does the company now have the systems to try to catch anything like this malfeasance? I don't know. As I mentioned earlier, the enterprise software stocks have been roaring, reacting very positively to pretty much everything these days. So maybe we should start thinking about buying the stock of Adobe, which has some of the very best software to help businesses with marketing and web design. I like this company very much, but it's been stuck in enterprise software purgatory. Not anymore. Maybe it has a real run by just delivering good numbers. Thursday starts with the producer price index number. Again, we need these inflation numbers. Someone please cool down. There's been so much speculation that we have to worry about what happens if the Fed gets cold feet about rate cuts and pulls the rug out from under us. At this point, at this pace of excess, well, let's just say they might have no choice but to shelve some rate cuts next year. Finally, one of my favorite stocks reports, Broadcom, symbol AVGO, by the way. It reports, and this tends to run up into the quarter and then sell off when we see the actual sales and earnings. I expect that to happen again as Broadcom makes equipment for networking and artificial intelligence, as well as hardware for phones and servers, and hardware is a little out of fashion all of a sudden. Now, we own Broadcom for ages for the Chapel Trust, and I've urged Investing Club members to buy Broadcom on these very dips I just mentioned. It's been a terrific, successful strategy. This time should be no different. So let's understand it goes down after the report, and that's your chance to pull the trigger. Bottom line, look, I'm trying to get my arms around a market that takes up all sorts of crypto, lots of unprofitable companies, never too great a sign for those who want the Fed to cut repeatedly. I want you to keep that in mind so you won't be surprised if we get some overheated inflation numbers next week and the market gives us some of these extraordinary gains. Let's go to Michael in Pennsylvania. Michael.
Oh, thank you, Mr. Cramer, for taking my call.
Of course.
Merry Christmas to you and your family.
Oh, thank you.
And a Happy New Year.
Excellent.
All right. I'm calling about Ford. It has a yield of 5.9. It has a PE of 13 and a dividend of 15 cents. I know a lot of people don't like it right now because of the threatened tariffs coming from Trump. And I believe that over 40% of our automobile parts and stuff are exported to the United States from Mexico. So what is your outlook? Was it, like buy, sell, or hold?
I bumped into someone this morning walking up the stairs here at the exchange. And he said, how come no one's paying any attention to these tariffs? I said, I sure am. And I talked about it. And then I mentioned Ford. I said, look, they've got this really convoluted ownership structure where you could have, of how parts are made and then shipped back and forth. And that's the kind of stock that could really be hurt. I think you've correctly summarized it. And I think even though at 10, it does seem cheap, it's not. And I don't want to own the stock. Let's go to Rich in New Jersey. Rich.
Hey, Jim. Happy holidays and a Jersey Shore booyah from Red Bank, Jersey.
Thank you. I'm an Ocean Grove guy. Good to have you on the show.
Thank you. Thanks, Jim. Jim, my question today is on shares of Dow Chemical. Stock's been getting hammered, down 23% year to date, closing today around $42. Stock hit a high of $60 back in May of this year, and it's been on a slow, steady grind down. Got a nice dividend, 6.5%, and I'm puzzled as to why the stock keeps going down week after week. So,
okay, it's a great question. It's a great question, Rich. And let me just tell you that the numbers keep going down, and that's why the stock keeps going down. Because it still sells at 20 times earnings because the estimates keep going lower, and that is because of China. And when we have these stocks that have anything to do with China, they just tend to hurt and hurt and hurt. I will say this, though. The stock has reached a level where if it goes to 7% yield, and I know they have money to be able to afford the yield, I'm going to say you have to buy it. Let's go to Adam in Georgia. Adam.
What's up, Jim? How's it going, man?
Not bad. How about you, partner?
Man, Jim, if I was doing better, I would get arrested.
Now, that is saying something.
House of pleasure.
Well, Jim, I got a question, man. I've owned Home Depot for about 25 years now, rolling over my dividends the whole time. Now, do you think I should buy some more or sell?
Okay, no, don't sell. Don't sell. It's up on a spike. It's at 431. I be on it for the Chapel Trust. It still doesn't sell at 30 times earnings. Why do I say that? Because if the Fed is actually going to cut, it's going to end up earning much more money than people think. Hold on, and if it comes back down to 410, I know that we will tell people from the Chapel Trust, even 415, to buy. Well played. All right, listen to me. Don't be surprised if we get some overheated inflation numbers next week and the market gets hurt a bit. On my money tonight, is it finally happy hour for the alcohol industry? I'm pouring through the latest stock action and giving you my take on El Jimador. Then last night you called in on a menswear company with a long name and a short tenure as a public company. I did some homework. I'm going to tell you where I stand, but it is a little difficult to, let's say, fathom. And later, are your portfolios in need of a year-end refresh? I'm looking at Cramerica's holdings as we play MI Diversified. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.